Imagine you're investing in 2025. Markets are unpredictable, speculation is rampant, and stock prices are soaring. Yet, Warren Buffett, the world's greatest investor, is making a very different set of moves. Today, we're breaking down Buffett's approach to investing this year, his insights on high interest rates, overvalued stocks, and speculation. If you want to invest wisely in 2025, there's no better person to learn from. Let's dive in. The interest rate problem. For the first time in decades, investors are facing a new reality: higher interest rates. Since 2008, the Federal Reserve kept rates near zero. But post-pandemic inflation changed that, pushing rates up to 5.2%. Even with cuts, they remain high. Why does this matter? Because interest rates act like gravity for asset prices. When rates rise, safe investments, like US Treasury bonds, become more attractive, now yielding 4.3% with little risk. That makes stocks less appealing. Higher rates also make it harder for businesses to borrow, grow, and manage debt. If inflation remains persistent, rates could stay high for years. So, what's Warren Buffett doing about it? Buffett's response to high rates: he's shifting more money into bonds. Buffett has reduced his stock holdings, especially in Apple, and built a large cash reserve. But that cash is actually short-term US Treasury bonds, taking advantage of higher yields. A few years ago, Berkshire Hathaway earned almost nothing on its $125 billion in cash. Now, thanks to higher rates, it's generating nearly $5 billion a year. The lesson? Don't ignore bonds. They provide stability and strong returns, something Buffett values right now. The overvaluation problem. You'd think higher interest rates would bring stock prices down, but in reality, that hasn't happened. In 2023, the S&P 500 jumped 24%. In 2024, another 23%. And heading into 2025, stocks, especially the Magnificent Seven, Amazon, Apple, Microsoft, Tesla, Google, Meta, Nvidia, are still soaring on AI hype. Buffett sees a problem. In his recent shareholder letter, he wrote, "Prices are sky high for businesses with decent long-term prospects. Right now, we aren't seeing many attractive opportunities." At Berkshire's last shareholder meeting, he was blunt. "We have $168 billion in cash because we don't see anything worth buying." So, what's the strategy when valuations are this high? Buffett's response to overvaluation. Buffett follows two key approaches: stay patient and build cash reserves. He knows great opportunities come, especially when others panic. Look beyond the US market. A few years ago, Buffett invested billions in Japanese trading companies because their valuations were far better than US stocks. Other investors like Monish Pabrai and Howard Marks are doing the same. But if you explore foreign markets, stay within your circle of competence. Never invest in businesses you don't fully understand. The speculation trap. Speculation is everywhere. Bitcoin doubled in 2024. Skyrocketed. Across the market, hype is fueling risky bets. Buffett has seen this before. At last year's shareholder meeting, he warned, millions of people are treating the stock market like a casino. And while this can work for a while, eventually the clock strikes midnight and everything turns to pumpkins and mice. The key lesson? Speculation can create an illusion of wealth, but it never lasts. Buffett follows a simple rule: we only swing at pitches we like. If nothing is worth buying, he waits. And when the market panics, he's ready to act. Key takeaways. As we head into 2025, here's Buffett's approach. High interest rates make bonds attractive. Don't ignore them. Stock valuations are high. Stay patient and wait for better opportunities. If you invest internationally, stick to what you understand. Avoid speculation. Investing is about business ownership, not gambling. And finally, remember Buffett's punch card rule. If you could only make 20 investments in your lifetime, you'd be selective. That's the mindset great investors adopt, waiting for the right pitch. Thanks for watching, and I'll see you in the next video.